Well, there was a collective sigh of relief from retailers and mortgage holders after the RBA left rates on hold at 4.5%. The decision balanced strong growth here and in China with much more modest prospects in the US and Europe and continued uncertainty on the financial markets. The Reserve Bank also made it clear that rates will go up, just not yet. Here's Philip Lasker.
The Reserve Bank is not quite as trigger-happy as financial markets thought. But Paul Bloxham, who worked there as recently as August, knew that.
The Reserve Bank doesn't think there's any great urgency about getting rates up. They see on the horizon that the resources sector is set to boom and the economy is starting off this upswing with high inflation, and that therefore rates will need to rise, but they don't think it necessarily has to happen right now.
But it will happen. The RBA board issued a clear warning that if the economy tracked as expected, it's likely higher interest rates will be required at some point to ensure that inflation remains consistent with the medium-term target.
Clearly, the whole issue of an interest rate increase sometime between now and Christmas is still the elephant in the room.
We still have in mind that rates will go up this year, probably by 25 basis points.
Retailers living in fear that a rate hike will kill any chance of a Christmas spending revival were thankful rates did not rise today. The latest retail sales numbers saw a modest 0.3% increase in August, following a strong rise the previous month.
Once you take out takeaway, restaurant and cafe from the figures, they're not quite so robust for the retail community.
There's not a high level of private demand out there. People aren't spending, neither businesses nor consumers. And so in those circumstances, an increase in interest rates would have been quite damaging across a broad range of the economy.
What's more robust is the jobs market and the resources business. Although job ads rose less than 1% in September, the market is still relatively tight. Also, the August trade balance was in surplus to the tune of $2.3 billion. Exports were down, but so were imports, and the trade position remains strong. The surprising interest rate decision saw the Australian currency tumble more than a cent against the US dollar. The Australian situation was in stark contrast to today's events in Japan, where the central bank eased interest rates further to between 0 and 0.1%, saying it would set aside $440 billion to buy government bonds and other assets to support the economy.